Welcome to the Profit Answer Man, Marcia Riner. It's great to have you join us.
Thanks, Rocky. I appreciate you giving me the opportunity to be here.
And I'm very honored to have you. Can you share a little bit about yourself and your business?
Yeah, so my company is Infinite Profit Consulting, and I've been doing this in one way, shape, or form for gosh, probably 25 years. But it all kind of stemmed up from me being a financial advisor. And as a certified financial planner, I would talk to my clients about their retirement. And a lot of my clients were business owners. So they'd come into the plan with the idea that they were going to sell their business someday. And I said, great, what's the value? And they'd come up with this Shark Tank kind of idea. Oh, 10x EBITDA, and we're going to have all this stuff. And I'm like, oh, great. So what are you going to do to ensure that that value will be there when it's time to let go, right? And they never really had solid ideas. So back in 2016, life started to shift for me, and I decided to take all the coaching and training I had invested in myself and start to turn it around with my business owners. And that's where I really started having a great time of planning the company for growth and profitability so that they could retire someday and count on that business asset as a part of their retirement plan. And I've never looked back. I love it.
It's funny. I have this picture over on the wall over here, and it says, profit is not an event, it's a habit. Right? If
Yes.
you're going to have 10x EBITDA, you better have EBITDA, right? You better have the E, which is earnings, which is the same, not exactly the same as profit, but along the same concepts. If you don't have profit today, 10 times 0 is 0.
Exactly. And I think that's part of it. But, funny thing is that business owners that I've met often have come into their business, leaving corporate, whatever, by knowing some little skill, right? And then they mistakenly wrap a business around it without understanding the key functions and other roles that take place in a business. And they act as the most are their chief bottle washer. They take out the garbage each day, and they don't realize that one of those primary functions is to truly understand the financial side of their business. And they go off chasing customers and putting out fires and forget about or depend on, which is kind of worse, their accounting partner to make sure that they're doing the right thing. And it's not a common practice for your CPA to tell you that you're profitable or what you can do to make yourself more profitable. And so they just trust and rely that it's going to magically happen if they just make one more phone call.
It sounds more like they built a job versus building a business. And there is nothing wrong with that because honestly, in many senses, I built a job for myself.
Sure.
A job that I love, and my boss sucks, but that's okay. I deal with him all the time.
And you're working for close to minimum wage sometimes, and
No,
and
no,
long
no, no,
hours.
not my bit. This is the profit answer, man. We don't work for minimum wage. We work for maximum wage. That
Love
much
it.
we were smart about.
Yay.
But what I learned, and kind of my big aha that brought me into this business, was when people are wearing all those different hats of the business, the hat that they hated wearing the most was the accounting hat, the numbers hat. They actually had a massive aversion to it. Because I came from not the financial planning side, but for teaching people how to build wealth. And I realized that people really had a lot of issues around money mindsets, around spending and all these behaviors. And then I found out, well, business owners are people and they have the same problems in their business and it doesn't change. And so for many of them, it's definitely that same issue that you're talking about. And so
Exactly.
you have to wear that hat. I think I'm married to a CPA, so I can say these things, but they're in the sense they're the same way. They love their craft, which is doing a tax return. Well, doing a tax return has nothing to do with running a profitable business. it's nothing more than reporting how that business did based on how the government wants you to put it on paperwork so that they can take more money from you that, well, we won't even go into that.
Yeah, a friend of mine and I came up with this, years ago. There's three ways to look at your financials. There's the good way that you want to look at it if you're asking for investment from somebody on the outside. So you make your company look really good. Then there's the ugly way is what you want to give to, the IRS, so you don't have to pay as much taxes. So you make your company look horrible. And then there's the bad, which is the day-to-day, input output of your accounting. It's all the same numbers, but you can highlight it in different ways to make it look better and make it tell a better story. Which is the funny thing. I am not an accountant by any means. I've just learned so many little tricks about looking at the numbers to make it make sense and to see that that data tells you a story. And how can you make little incremental changes along the way? Not big, hairy changes, because those make everybody uncomfortable, but little incremental changes in the drivers that affect those numbers. And that's really where I've found my sweet spot and helping customers to increase their profitability.
And that makes a lot of sense. I think the problem is, too often I've noticed business owners always look at the rosy side of numbers. They don't. They make up the rosy side of numbers. They don't actually know the reality of what's happening in their business, and they just think it's okay. And unless you do the math, you don't really know. So we're here today to talk about how do we get profitable in 30 days.
Yeah.
I'd love to hear how we do this, because I believe, like what you said, small, simple steps get you to where you want to be.
Well, you know what? I found a little trick with a couple of the strategies that I use with my clients that when stacked upon each other, they really make a huge impact in the business. But the funny thing about it is that, like most business owners, they're chasing all the sexy strategies, right? They're going after AI, where I can do this, or, I've got this new market to be in, or, if we just sell over here, we can be. And they jump from the ground, the foundation, into the fifth floor of their business and start charging ahead. And some of the really basic pieces that they forget to go back and look at are how I can tweak that profitability and boost it really quickly in 30 days or less. And funny enough, they're not sexy. They're really actually kind of boring and basic, and they come back and they go, really? And I'm like, yeah, but it works.
So what are some of these boring strategies?
Well, funny enough, it happens to do with, I think, the third piece to your equation, which is expenses, right? I believe your equation is sales minus profit equals expenses. So those expenses really drive, because you can boost revenue all you want, but if you can't manage your costs, you're going to be in a terrible situation. So the first place I like to look at, and whether you're a service company or you're a product company, it still matters. And the first place I love to look at is the cost of goods sold. This is what you look at, the expenses that help you to sell your product. And obviously, if you have a widget you're selling, there's a lot more things you can look at and change and fix. But even service companies, when you're looking at labor and marketing and pieces that all come into how you're selling your product and making your product, you can still look for opportunities to cut costs there. And when I talk about cut costs, I'm not talking about taking a hatchet and cutting all costs. Little incremental changes, like 5% adjustments combined, can have a huge impact when you look at the cost of goods sold. Now remember, this cost changes with the number of units you sell. So if you sell 1 unit, it's the same fixed cost as if you sell 100 units. Now, granted, some of them you may have volume adjustments that lower the cost at higher volumes, but you want to look at the items that you're spending to make and produce your product. And that's the first place I look.
And I think this is one of the things that people don't always realize. When you look at sales minus cost of goods sold, that's generally what we call gross profit. Let's just say we have a company with a 10% profit margin. If you can increase gross profit by 5%, you actually increase net profit by 50%.
Exactly.
It is that massive of a multiplier, and people don't realize, wait a minute, this little change results in this big change. And again, maybe you can't do that in a day, like you said, but if I can get 1% this quarter and 1% next quarter and 1% the quarter after, in 5 quarters, I grew my net profit 50%. 1% at a time. And that's the way we like to do things.
And having that kind of change is not disrupting to the company. So many people hate change. I don't know anybody who really truly likes change, honestly. But when you throw change into a company and you've got employees and team players and vendors and all these things, people don't like change. So when you look at those, like you said, the little 1% that add up, it's easier to implement that when you can do it. And when you're looking at cost of goods sold, you can look at your vendor relationships. You can look at how you're paying those vendors. Are you getting a 30-day free money on your payment to them? There's so many little itty-bitty things that unless you really look at your cost of goods sold with a magnifying glass, you're going to shy right over them and go, oh, that's just normal business. I can't change anything, so I'm just going to keep chugging along. You'd be surprised what a little bit of negotiating can do for your bottom line.
It can, and that kind of also reminds me of, we talk about treasury management, and no, nobody understands treasury management. It sounds like this big word, but it's literally managing the treasure in your business, which is your cash. A couple of years ago, and for the longest time, most business owners got 0% interest. Mm-hmm. Today, you can get 5% plus interest, mm-hmm. which means that if you're not paying somebody for a little bit longer, you can earn interest on that money. And when you do that across an entire year, you actually can make, and you have to make sure that your bank is working with you, or you find somebody who's going to work with you, that you're going to get 5% on the money sitting in your business. And all of a sudden, you're making a lot of extra money just on the money you have in your business. And that's another way to pick up those couple percentage points.
Here's another.
And again, there's not one way, there's multiple ways.
Hundreds of ways that are often overlooked. And that's why I said this isn't the sexy stuff. This is the ground floor stuff that is way overlooked by so many people. But another thing on your point there is if you can pay for something with cash, you can also come in and ask for a cash discount.
That's correct. There's 5% there, maybe.
Exactly. Right? So there are many different ways to, as they say, skin a cat. I have a dog, so that's okay to say.
So we talked about the expense side. What are some of the other ways we can improve our profit quickly?
Excellent. So there are two sides of the expenses, and this one will be a little bit easier. So we have the cost of goods sold, but then we have another major set of expenses in our business, right? They're the fixed operating costs. These don't change whether you sell one widget or 100 widgets or units, right? They remain the same. Now, again, we want to take that same lens and we want to look at how can we renegotiate our fixed operating costs. And again, by making small little incremental changes that add up, we're boosting that net profitability, and therefore it lifts all boats with the same manner. And so this is something you can come back in when it's time to renew a lease. If you have a lease, maybe you're now shipping into home-based business, or you're looking at employee costs that don't involve the sale of things. There's lots of ways that you can chip away at your expenses to therefore increase your profit. And all of these strategies don't require that you're chasing more clients, spending additional money on marketing, or hiring more people, right? Which is the normal growth strategies. These are strategies that are just looking internally on you and what you can do to boost those profits.
And so I think the important takeaway here is if I sell 1,000 of an item and I divide that by my fixed costs, it's whatever that number is. But if I sell 1,200 of an item and I divide it by that same fixed cost, I actually am picking up a better profit margin because those numbers are fixed. And just to define some of the fixed costs. So your fixed costs are clearly, if you have fixed labor, meaning you're paying people a salary, your rent, right, or your whatever your leasing costs are. If you've got machinery and overhead, your fixed monthly payments, your phone system, all of these different things. And I think what we don't realize is once we start building up all these fixed costs, if our business goes through the roller coaster rides,
what business does that? Wait a minute. What business goes through roller coaster rides? Who are you talking about?
Yeah. So those fixed costs during the roller coaster ride are things that can really, that's where you get hammered. And if you're not ready to make difficult decisions at that point quickly, then we've got a problem because you can never recover it.
And funny thing is, I ask my clients to go through this little exercise. Does it create a client when you're looking at your expenses? Does it create a client? Does it increase the value of a client? And does it make a client stay longer, right? Because the whole purpose of a business is to create a customer or client and to produce a profit, right? So those three factors, when you're looking at those expenses, we all have subscriptions that we forgot to turn off. We all have expenses that maybe our lifestyle shoved through our business and our accountant says that's a great tax write-off. But it affects the profitability, right? So it's managing the expenses. Are we still paying a full salary to ourselves, even though we're running our car and cell phone and family insurance and everything else through there? You know, we need to adjust things to make them make better sense for the profitability of the company.
And I think that the fact that just by its very nature they are fixed means we better be very careful before we make a choice on a fixed cost, because it's not something we can unravel easily. And should the economy or the tide or life or technology change, you don't have the flexibility to make that change. So be very careful when you make that obligation.
And they chip into what goes into either your right pocket or your left pocket. That still chips into your money.
It does. And employees are very much of a very large fixed cost, and it's very hard to let people go. But if times get tough, you need to be ready to. Every large corporation has massive layoffs first thing they do.
All right. So you want to know the third strategy I like to do?
Yes.
And funny enough, this is the scariest. Because business owners are afraid to do this, even though they're having it done to them constantly. So my third strategy, when I ask people to cut costs in cost of goods sold and in their operating costs, I ask them to look at when the last time they raised their prices. And so this combination of three things is where we get that 45 to 50% boost. And if you can raise costs, consumers understand that costs are rising, right? Transportation costs, product costs, labor is increasing. Life is just getting more expensive every year. That's called inflation. So as inflation increases, we need to look at it where the business is not taking it in the shorts. They're actually making movements that are normal and acceptable and customary in business at all times. So why not adjust your costs? I love, again, incremental changes. Don't shock your customer, but look at ways of when was the last time you raised costs? What is the competition charging for it? What value do you provide that maybe you could add into that as you're raising your costs, right? Value doesn't always necessarily mean more product, but maybe it's a supporting service. But if you can increase your cost by just a little, we're talking less than 5% again, right? You're going to see that headway and are not just a one and done, but they develop over time and they last over time. So it's not a one-time boost, it's a continuous boost in your profitability for years to come if you can continue to do these three items together.
So I'm going to do some wild and crazy math. Okay, because I think, I say every business is a math equation. Let's say you're $1 million business and you got a 10% margin. In other words, profit margin. So if I'm $1 million business and I have a 10% profit margin, at the end of the year, I have $100,000 in profit, correct? Yes. So let's take this $10 million business and let's be wild and crazy and let's increase prices 10%.
Okay.
Okay.
Because it's an easy number to add. That's a big boost, but yeah.
Because it's an easy number to add. You could do 1%, right? But we're going to do 10. That immediately adds $100,000 to my bottom line.
Yes.
So now my profit is $200,000. Yes. But you're going to go, people are going to leave. You're right. So let's say, but wait, I'm going to do the math. Let's just say 20% of people say goodbye. Yep. Here's the first thing to remember. Those 20% were probably your pain in the butt customers anyway.
Yes.
Right? They were buying you because of price, not because they loved you. So now, if you think about it, our revenue goes from 1.1 million. We lose 20% of that. So that's that takes us down to what's that?
1.8 or 1.6. Did you lose the whole thing?
Well, we're at 1.1 million and we lose 20%. So let me do quick math on a calculator.
I'm a finance major,
so that
and
takes
I still need a calculator.
No, that takes us down to 880,000 in revenue. So even though we've raised prices by 10%, we've lost 120,000 in revenue. You're all freaking out. But watch this. When I look at my profit, I'm making $176,000, which means I'm working less by 20%. Oh, that's nice, right? And I'm making 76% more money.
Yep.
Wow.
Yep.
That's a lever I like to play with. And I say businesses are full of levers. When you understand your math equations, you can do this. Now, people are going to go, hey, here's my suggestion. Okay? Because you said take baby steps. Let's identify our 10 worst customers and let's raise their price 10% and see what happens.
I love that idea.
I mean, at the end of the day, you're going to be you're not going to be disappointed if they leave. And if they stay, well, now they're paying you a premium because they're just not a fun customer to work with anyway.
I love it. I love it. Creative thinking, and that's where people like you and I come in to help business owners that are so busy in the trenches that they don't have the time to look at what little levers you can pull that will make huge changes to your company and the profit. And again, profit is what goes in your pocket or can be reinvested back into the business. Or, oh gosh, yes, you're going to have to pay more taxes on it. But you know what? You got more money to pay taxes with. So there's a lot of opportunity. You can look at the negatives and the positives of everything, but there's so many opportunities that you can do, more customers you can serve, and more industries you can be in, and people you can help if you make more money. Why not?
Well, I can put that $76,000 into a retirement account.
Yep.
In which case, I don't pay any additional tax.
I agree.
Okay.
I agree.
And now I've created a safety net in case something happens to my business so that if sale time comes and my business is no longer valuable, well, I have my retirement plan and that's growing and that's making money somewhere else.
Yeah.
So there are ways to do this smart, and then there are ways to go buy a new pickup
Oh,
truck. But
gosh.
whatever.
If that is not funny enough, that's the favorite recommendation of every accountant at tax time when they're talking about tax planning, right? Let's go buy something that you needed to buy so you're not going to pay taxes on it. And I'm like, why did I need to buy that, right? I love your idea better of investing in yourself, paying yourself in the retirement. But that's a whole nother story that I can go on years about. But it's like thinking about your business in a different way. Nobody made it successfully to the top on their own. They had advisors and people that helped them look at their business in ways that they didn't think to look at. And that's the value of advisors, is that they're able to say, hey, have you thought of this? Here's how the calculation. I bet not one business owner, well, very, very few business owners would know how to do that calculation you just did, to even realize the direction they're going in.
And so I will challenge you. They didn't need to buy the truck. They wanted to buy the truck, which is a separate situation, right?
Yes.
And that's okay. There are needs and wants, and we need to understand what they are and whether or not buying the truck is going to make your business grow, because more than likely it's not.
Correct.
And so let's be appropriate with
Yes.
that. Any other suggestions that you wanted to chat about but didn't get a chance to?
No, I think that I can go on for days. I've got definitely 50 some odd different strategies that I use in various situations with my clients. But I think these three stacked together are really the most impactful, that I can help get an immediate boost with my customers right off the get-go, and it lasts. Right? They're learning a new habit to change their business for the better that impacts everybody.
And I appreciate that. At the end of the day, we are all about how to increase profit and then how to remove it from the business and keep it so that you can grow your personal wealth. And
Exactly.
that's why you went into business.
Exactly.
So let's at least make sure that we do that. If people would like to learn more about you and your services, how do they do that?
Well, you know what? You can always go to my website, Infinite Profit Consulting, and you can gather. I've got 3 books there. I've got my Profit Booster Strategy program that I just kind of explained to you, and I'm all about giving and sharing ideas, because I know that when the idea starts to flourish inside of you, you'll want to take action on it. And really, my strength is helping my customers take those action steps and get the strategies implemented in their business so they can continue to do their business better and stronger. So yeah, go to Infinite Profit Consulting. Nose around in there. Watch my podcast, Profit with a Plan. Rocky, I believe you were on about a year ago, maybe a little longer than that, as a guest on my show. And there's always, again, I'm always sharing ideas. So if you're open to it, reach out.
And we'll put those in the show notes. Thank you so much for joining us
Thank you,
today.
Rocky. I appreciate the opportunity.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.